Hi, this is Joe Rabil with Rabil Stock Research. So we're going to look at the market. We'll go through some indices. We'll look at the symbol requests that came through. But I do like to start the show out with a lesson. And I want to talk about MACD today in 3 different time frames. So I'm going to show you how when a stock is pulling back sharply, we can buy the right kind of weakness. If it's the right kind of weakness, and we will lean a little bit on ADX, but it's mostly a MACD signal in 3 different time frames. And when it shows up, you want to know that it's there and try and take advantage of it. All right, so let's go ahead and get started. All right, the example I want to use is Vista Energy VST. I've got the monthly chart bottom left, weekly bottom right, and the daily in the upper right. Hourly's over here, but we're going to focus on these 3 time frames. And what we're looking at is a situation where we have this very strong trend in place. We have confirmation in MACD, and I do like to look at the ADX. I mean, there is confirmation in ADX, but the signal is a pinch play on the monthly. If you notice here, we're getting a second pinch. So we had one pinch here, and this is the second one. And I'm typically, with a breakout, after a breakout, I'm looking for the first 2. After that, we're looking for a more complex correction. I'm probably not looking to play any more pinch plays at that point, but we get this pullback. All right, we've got a nice rising 18-month above a rising 40-month. Now, I mean, this stock has gone from 200 to 100. It's been cut in half. Now, I'm not going to get into this, but it's something that one of W.D. Gann's favorite rules was if you're 50% off the high, you want to look to be a buyer. So that's a nice little add-on to be on the lookout for, especially a lot of stocks that have been hit. Just be on the lookout for ones that have been cut in half like this and see if we don't start to see some signals develop. All right, now, we get this pullback. We know we've got a pinch play on this time frame. So when I see a pinch play on this time frame, I'm going to go down on this time frame and see if I get a zero line signal. All right, and a zero line meaning we were overbought. Here's the zero line. Let me just draw this going sideways. So here's the zero line, and we've gotten sort of stretched away to the upside, and we work our way down. And what I'm looking for in most cases is either, a touch and go where we come down and touch the zero line and turn, or we do breach it slightly, but the signal line is still above. All right. When we have that condition in place, which is basically at the end of March, early May, I want to go down to the smaller time frame, because what I want to do is I want to measure. If you notice, we have a down move, a rally, down move, rally, down move. All right. Now, what is very hard for MACD to do, and even ADX on this time frame, is to measure the strength of these moves. So we have to go down another time frame so we can get a better idea of how strong these moves are. So we're going to move down, rally up. This move was very strong. You see how strong the ADX was? You see how the MACD hit a new low here? All right. But then notice what happened. We get a rally up and we make a new low in price, and MACD is making a significantly higher low than the prior low. Right there, right? And not only that, we get the ADX to not cross above 25 during that. So we're getting ADX confirmation. Now, again, the signal itself is based off the MACD. I've got a zero line signal here, a pinch here, right? And divergence here. But I do want to know when I'm going down like this, that this ADX is not that strong. I want to make sure there's not a lot of strength in the selling on this second time frame. So if this is your main time frame, this is the pullback time frame. This is kind of like our next time frame down. We're looking at the zero line reversal. We want to make sure that the ADX is still pretty low based on the selling. So this is right around that 25 mark. It didn't get a big move based on the selling pressure to the downside. That's very important. If we have that and we have the strength to the upside, based on the MACD hitting a new high and pinching in, and then we get the zero line reversal, then we can look for the divergence on this time frame. Now, we can play this a number of different ways. We can play the green bar spiking up through the low. We make a new low, and then when we clearly retake that low with a big green bar, that's one way to do it. The other way to do it would have been to wait for this pinch play. It would have been in, right around that 120 mark, which again might seem a little late when you're looking at this time frame, but if we're looking to try and get in on this monthly pullback, 120 is pretty early. We haven't even completed this bar, and we're just getting ready to turn. So it's a really good approach to be on the lookout for so the way I would do it, the way I would look for these is try and find stocks that are showing straight to the upside and have pulled back to a rising 18-month. Now you can do the same thing on the weekly chart. So let's just move it down a time frame. Let's say this is a pullback to an 18-week time frame. All right. Then on the daily chart, you want to make sure on the down move, we're near the zero line, we're straddling the zero line or near it or maybe slightly above, and ADX is not showing strength. All right. And then we can go to the hourly time frame and look for that divergence pattern to develop, preferably in both time frames, but you can display it if the MACD offers this signal. All right. So what we're trying to do is get in on this time frame. This monthly chart is the signal. We're getting a strong move and a pullback, and we're trying to buy it off of trend support at the 18-month line. And we're trying to make sure there's not a lot of strength in the selling on this time frame. And then we're trying to pinpoint entry using this time frame. Three different signals, three different MACD signals: pinch play, reverse, a zero line reversal, and then a standard divergence. All of these are in my course, in my book, and as well as my courses. All right, let's go ahead and move on. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at RabilStockResearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. My comments are for educational purposes only. Please do your own research before making any investments. So we're going to start out with the sector. I like to look at this view and keep it up to date for everybody, probably once or twice a month, depending on what's taking place. And what we've got is it's about a year's worth of price action on a weekly chart with the 18 and the 40 simple moving averages on it. And then I've got the relative strength line relative to the S&P with a 30 period moving average. All right. Now, what I'm noticing, and when you go through this, you can see pretty clearly which ones are showing, like this is pretty clear that this XLF, while it has a pretty decent pullback here, it's pulling back a lot less than the market is. And that's why this line continues to kind of progress. So we want to focus in on areas like this where we've gone through a bit of a correction, but we're not showing, it's showing a lot of resilience relative to the market. Same thing holds true here where the XLI, which also had a pretty deep ABC correction, during that correction, especially recently, is showing a lot of improvement. And then even a few of the defensive areas, XLP is holding its ground. This is trying to turn, and the XLU, not so much for the healthcare. They had a rough couple of weeks here, not as attractive, especially with the hammering in the UNH, which is probably making it look a little worse. But there are other stocks in that area that have also been hit. So one of the other things that I noticed here is that the XLK is still trending downward. It's rallied back up to the moving average. It hasn't really turned around yet. Now, because the technology is such a massive sector, there's always individual ideas there that I think can still be considered. So I wouldn't completely discount it. They got very oversold, meaning I do a report for my Monday report for my subscribers, and it shows how many of those stocks are short-term positive. And we just basically pulled one of these. We got very down into a very oversold area, and we're starting to turn up. So I would be watching the stocks that didn't break down throughout this pattern. All right. Now, I don't think that I want to buy them right here, but if we get a pullback, then those stocks could trade very well if it turns up and ends up being a higher low or some kind of a test of the low that doesn't break down. If we don't see violent selling to the downside, some of those stocks that are holding their ground are going to look pretty attractive. The other thing that I'll say is that along with the XLF, the XLC has also remained continues to be pretty strong, and so that's definitely another area that you could be on the lookout for. All right, let's go ahead and move over to the individual indices. Okay, let's look at the QQQ. Very similar pattern to what's taking place in the S&P. It's actually a little bit weaker, I would say, but the same concept overall. So we've got this monthly chart that is has made a pretty good move to the upside. It had pretty good momentum to the upside, confirmation in a MACD basis. But when it dropped, it violated the 18 on an inter-month basis, but then came back above by the end of the month. But notice what happened to MACD. MACD is now crossing down through, or has crossed down through the signal line, similar to what happened in 2022 when it turned down. Now, again, I'm not necessarily looking for the same type of a bear market decline. I mean, it could play out that way, but that's not necessarily how I would read this pattern. All right. What I would say is, though, that when this rolls down, it's very rare that we just turn straight back up. So I could see us carrying a little bit higher, but having to come back down and test this low at a minimum. It doesn't mean we can't go down again. I'm just saying we have the potential for this to, I think, form some kind of a zigzag or test of this big bar here. And the positive is that we got very bearish. People were very bearish at the low, and they are even still bearish right now. Overall, I've got my investors' intelligence sentiment numbers negative, still negative right now, more bears than bulls, which means there's still a lot of cash on the sidelines. So that's one thing. And that should act as support or a backdrop of support if we do come back down. But I am looking for this to come back down based on what the MACD is doing. All right. And then when we look at the weekly setup, we've got this bearish pinch developing on the weekly and a rally back up to the 18 and the 40 week, right, with strong ADX condition. Now, the positive, again, if the low, look at the volume, that was a huge volume bar at the low, but we could come down and test this area. And for all I know, we could get something really ugly to the downside. And the reason is when I look at this RSI, so RSI had been holding. So here's where RSI 20, the red line, crossed above in early 2023. It crossed above the 50 mark and basically stayed above on each pullback, stayed above. And now not only have we broken it, but we've rallied back up, and it looks like we potentially could be failing at it right in the area of the 18 week and the 18 day. And you already know that the QQQ has a lot of technology in it, and technology is actually a little bit weaker on an RS basis. I just showed you that in the XLK. So we've got this potential RSI signal setting up, and I think if we turn down from here, now if we keep pushing up, then we're not going to have an RSI sell signal because this RSI is going to cross above, okay? But if we turn here right at the 50 mark, and this starts to turn down and the RSI 5 turns down and price makes a pivot high, then I think we have to see how strong the bears are. How strong? Are they going to take it all the way down to a new low? Are we going to come down and make a lower low? We don't know. We're going to have to see how strong they are at this point. It's really kind of, I think, a difficult environment to tell. But based on the way this is set up, we've got strong momentum condition in place on the down move, and we're rallying back up. And look at the rally. The rally is not, so we've created an ABC rally to the upside, and notice how the ADX is very weak. So we had a lot of selling strength here, but the buyers, the green, is not causing this ADX to go up. You see how this has gone up in price, but the green line is not moving up and the ADX is dropping. There's no volume. This is not the kind of pattern that I would expect the start of a big move. We should come down, and really the trigger to the downside, this is out of my course, would be a downside break here. So if we break this trend line without any further progress, we're getting pretty close to making it. If both of these lines are above, then we have to look at not only a trend line break, but we're probably looking at some kind of a lower high to turn it to the downside. But we're right at that area where I think we have to watch and see what kind of strength we have on the bearish side. And if the bears are strong, then I think we have to stand aside and see how strong they are. If they come down and find support underneath and then turn things to the upside and the volume's not that heavy and it's not that violent, then I think we can start to feel a lot better about playing some of the stocks that have been very strong throughout this play. All right, let's look at the IWM. This is even weaker. below the 18-month line. Another one that's giving an RSI sell. But again, look at this strength in the sellers on the weekly chart. Look at the pinch play developing to the downside. So we downside move, and now we're pinching back in, coming into this resistance at 200. It's just not a real great pattern for, feeling like there's a lot of a broadening effect, like there's a lot of improvement taking place underneath. It doesn't really fit that description based on what's taking place. Now, there is a lot of support. I'm not saying there's much downside. It's just the upside is sort of questionable. All right, look at the SOXX. So, I get a lot of questions about the semis and what they're doing. Now, we can go and basically see that we had a really strong move to the downside, confirmed by ADX, confirmed by MACD, and now we're kind of pinching in on the move to the upside. Now, it did have good volume at the low. So I would kind of assume when I see big, huge volume, look at this going back, right? This is one of the bigger volume weeks we've had in a long time. Kind of have to assume there's buyers here, there's support here, but there's a decent amount of room to come back down and test this area. And that's sort of what I'm leaning towards. And again, we're getting this kind of half-hearted rally, ABC rally with very little volume, no ADX momentum based on the buyers, and we're rallied back to the zero line. Very similar to what the QQQ is doing, and we're rallying into resistance. So I think this is going to be a struggle. I think we'd have to have some really big news to get both the QQQ and the SOXX to kind of bust through. Like, then this would be the 200 mark. If we got a really strong bar to the upside, then we get the green to kick in, we get the MACD to cross. But we don't just assume it's going down. We still need to break this downtrend line. We're going to need to break that. If we break that, then that would be sort of the trigger on this rally to consider as I would call a sell signal or a potential shorting signal if you're a trader. All right, let's go on and look at something like RealReal pulling back and holding the 18-month. See, this is totally different. Strong move to the upside, 3-bar pullback, pulling in here. All right, now we got our zero line reversal, and look at this. This was a request. This was not planned. All right, this is the exact same pattern. We make a lower low here and a higher low here with no strength in the sellers. We get divergence in MACD and ADX. This is exactly like the VST pattern that I just described, where we didn't have much selling strength on this time frame. You see how we came down to the zero line and there's not a lot of strength here. So this is another perfect example that I didn't even realize. I had not looked at this stock yet, but is a perfect example of what we're talking about. Now, in this case, you might have waited for this beautiful pinch play to develop, crossing above, pulling back, right in here. The only negative was we had earnings coming, but you could have played it with options or something like that potentially, but that's a really good signal. Look for this on all 3 time frames. It does happen on a regular basis. All right, look at this SBSW. So we're trying, I think we need to break out on this. So it's a low ADX pattern without a real definitive level. So I would probably make it break out and then look for a pullback. We don't have any momentum yet on the daily chart. So we want to wait for a little bit of strength, and then we could look for a pullback on the smaller time frame even. But it's certainly a stock to watch, has a pretty good look to it. PSTG, too deep of a pullback. So what we're doing is we're separating out the winners and I think what could be winners and losers. We want to buy the stocks that are holding the area of the 18 and getting back above, right? This is breaking it and rallying back up to it, all right? This is not what we want. We're going to have a lot of resistance up in the mid-50s here. So again, this looks more like the SOXX with just too much resistance overhead, too much momentum to the downside. Be very careful with a stock like this. I think it's going to take more time. All right, SMMT. A lot of volatility. I don't like these spikes like this. I don't like this violent selling here. It looks very thin. It does trade a lot. The volume is actually really heavy, but I don't like all the volatility in the way that it's traded. I don't really see a setup because of this big red bar to the downside. So give this a little bit of time to quiet down. Let the volatility quiet down in this, and then maybe we could consider it. Thanks for watching today. If you have any symbol requests you'd like me to analyze on next week's show, you can send it to stocktalk@stockcharts.com or just put them in the comment area below. And also, if you want to learn more about these techniques with MACD and ADX, you can go to my YouTube channel. It's called Invest Like a Pro. Have a great week. We'll see you next time.